So I have rejected this stock. This is Kaynes technology. This stock came on my radar today. Actually, it has been coming on my radar for a long time, but I am making the video today. And if you look at this base that I have drawn here on the right side, and if you have been watching my videos for quite a while, you will understand why I have rejected this stock. I don't need to show you market smith or any other parameters or rankings or ratings of the stock to tell you why I am rejecting the stock. Just by looking at the base, I am saying no to the stock. However, we will dig into the details and we'll see what opportunity lies here. Now, please understand I am recording this video on 9th of September. I don't know when this will be published. Maybe towards the last week of September, this video will get published. Okay. So by the time you watch this video, it might be too late. But I want you to focus on the factors that I am looking for in a stock, which is allowing me to reject stocks effortlessly. I am not confused when I am rejecting a stock. If I don't see what I want to see on the chart or in terms of ratings or rankings, I just straight away reject the stock. It's as simple as that. So I want to make that process easy for you. So although you are getting this video late, but there is so much that you can learn just by observing what are the things that I am looking for on the chart as well as on MarketSmith, where I look at the data of the stock, the technicals, the fundamentals, and things like that. Okay. So let's begin. So first, let us look at the chart. Now, I don't need to go to MarketSmith to reject the stock. Here itself, I am rejecting the stock because see the base looks nice, okay, but the base is drifting downwards. This is 0.1 in the base. Let me draw the base for you. This is 0.1. That's 0.2. That's probably 0.3 and 0.4. Okay. So I am personally looking for minimum 4 points in the base because 4 points means 2 corrections in the base, which is what I'm looking for. However, I'm also looking for tight price action towards the top right hand side of the base. Okay. That is not happening here. Here the stock seems to be drifting down. Okay. The base is not happening. The base, see, the 4 points look like this. But what I want personally is I want the 4 points to look like this. See, it goes from here to here. Then it goes here, comes down, goes here, comes down. Now that point number 5 becomes my ideal buy point. This is not what I see on this stock. So that is why I am rejecting the stock, number 1. Number 2, you see after point number 2, tell me which candle out of the 5 candles has closed in the upper half of the base. See, this red zone is the lower half of the base. The blue zone and the green zone are the second quarter and the first quarter of the base respectively. So the blue zone and the green zone comprise of the upper half of the base. So although the price tried to get into the upper half of the base, there was supply there and the price was pushed down. Okay. So the price has never gone past the lower half of the base, which means the stock is drifting down. So these are the reasons why I have rejected the stock. Plus the buy point is coming in the blue zone and there are only 4 points in the base. Generally, when the buy point comes in the blue zone, I prefer minimum 6 points. That increases the probability of the trade working out in my favor. It depends how tight the price action is. Even if there are 4 points and the buy point is in the blue zone, I might still buy the stock because there is tight price action there. Okay. Here I don't see any tight price action. As far as moving averages are concerned, the 50 days above the 150 day and the 150 days above the 200 day, which is fantastic. It's a stage 2 uptrending stock. So my strategy with this stock is to wait for the stock to pick up. Okay. Maybe it will try to shake out this low. It will shake out this low, then start consolidating towards the right hand side. Maybe after 2 to 3 weeks, I might get a tight price pattern or a tight consolidation on the right hand side from which I could buy the stock, because the stock is still remains a stage 2 uptrending stock. There is nothing wrong with the chart here. At this moment in time, it is not the right time to buy the stock as per my analysis of the chart. There are minimum 10 candles in the base. See, this is point 1. So I start counting from this candle 1, 2, 3, 4, and so on. So I need minimum 10 candles in the base on the daily time frame chart, which means I'm looking for minimum 2 weeks of consolidation on the daily chart. Okay. Now let's go to Market Smith to study whether this stock is, if it sets up, will it set up as a positional trade or will it set up as a swing trade? So let's look at that. So I type here Kaynes technology. So let's dig deeper into the stock. Let's try to understand more. Now see, at this stage in our analysis, we don't need to know what business the stock is in. Okay. All we need to know is how is the stock doing compared to all the other stocks in the Indian stock market. We want to see the relative performance. So now I have opened Market Smith. Let's look at Market Smith data. I click on consolidated. Let's look at master score. Fantastic. I want this number to be more than 60. Master score combines technical and fundamental factors to give a ranking. So this number is beyond 80, which is super. EPS rating is 99, which is excellent. The stock has done better than 99% of all the stocks in the stock market when it comes to earnings stability, consistency, and growth. Price strength is brilliant, more than 80. I would prefer it to be more than 90, but anything above 80 is good for me. The stock has done better than 85% of all the stocks in the Indian stock market on a 52-week performance basis. Brilliant. Accumulation distribution rating, which is the institutional demand, is B. Fantastic, no problem. I would have preferred this to be A, but even B is fine for me. Group rank is 36. Brilliant. I want stocks only from the top 40 industry groups in terms of their 6-month performance. Okay. EPS growth rate, this is 3-year, 5-year CAGR rate. Okay. Super EPS growth rate. Earnings stability, this number, the lower it is, the more stable are the earnings. So this number 23 is acceptable. PE ratio is on the higher side. That is what we could expect from a growth stock. So that is fine. This number should be towards the higher end of the range. Return on equity is a problem. Okay. I want this number to be minimum 17%. Cash flow, this is operational cash flow per share, which is positive. That's a good sign. The number of funds that are holding the stock are increasing every quarter. Very good sign. Management or the promoters own more than 50% stake. Fantastic. The up-down volume ratio is 1.9, which means there is more demand than there is supply. Okay. Long-term debt to equity is only 2%. That means it is not a highly leveraged company. Beta is 1.45, which means the stock is a volatile stock. If the market goes up 10%, this stock goes up 14.5%. And the same ratio applies on the downside. Then you have quarterly EPS growth. See, blue means positive growth. Look at the growth in the earnings per share. Okay, 87%. I want this number to be minimum 40%. Okay, latest quarter growth in EPS. So when you compare June quarter of 2024 with June quarter of 2023, the growth is 87%, which is brilliant. Sales growth quarterly is 70%. Fantastic. So this stock could be considered as a positional trade. So if the stock sets up nicely on the right hand side of the base, okay, and if I end up buying the stock, I would probably plan to hold the stock for a longer period of time. As long as it remains above the 50-day simple moving average, I would hold on to the stock. Maybe after it goes 20-25%, I would sell half to book some gains, but I would free roll the trade by moving my stop loss to the break even and riding the stock as long as it remains above the 50-day simple moving average. One thing I want you to notice here is, see, Market Smith draws these patterns for you. So if I click here, it says pattern cup stage 2A. Stage means base. It's the second base. So see, every time it touches the pivot point, this is the buy point. Every time it touches the pivot point, it drops 8%. See, here it drops 8%. Here again, it drops 8%, goes up and crashes. Here again, if you buy here, again, it drops 8%. So every time the buy point gets set up as per market Smith analysis on the weekly chart, every time the pattern pivot point is hit, which is the buy point, the stock collapses 8% after a few days. Okay. That is not a good sign. That is not a sign of a stock which is in a secular bull run. Okay. The stock has currently not yet set up properly. We want the stock to set up properly. I want this stock to consolidate on the right side, give us some tight price action. Only then I would be interested in the stock. And even if I put my money into the stock, I will be extremely careful. I will keep an extremely tight stop loss because every stock has got personality. This stock has the personality of undercutting the stop loss. Every time you buy the stock and keep an 8% stop loss, this stock has the habit of taking out that stop loss before it starts to go up again. Okay. So please understand the personality of this stock which I am discussing with you. Plus the relative strength line is falling, which is understandable because the price is drifting down. There is a price drift down inside the base, which is something I am uncomfortable with. So I will give this stock 2 or 3 weeks. I hope all these ratings and rankings don't change during that period. As long as this stock remains in my radar, I will keep a watch on it. When it sets up a nice tight base in the green zone of the base, that is the first quarter of the base, and if these parameters remain strong, I will take the plunge, but I will be very careful because now I understand the behavior of this stock. I understand the personality of this stock. I understand what I am getting into. But for now, on 9th of September 2024, as I record this video, I am not interested in buying the stock. This video might get published very late by the time you see this, but please understand what I have discussed here. What are the things that I am looking for? Everything here looks positive, but for one simple reason, I said no to the stock. So I am being very strict with my criteria. I will not compromise. I will not go towards a stock. I will allow the stock to come to me. This is the key point every professional trader needs to understand. You don't go to a stock. You allow the stock to come to you. That way you have more power. Okay. So I hope you like this video. I hope you like the content that I'm creating. Please like, comment, and share this video with your friends, family, and business associates so that they can also benefit from this valuable knowledge. Thank you so much.